This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
India's market regulator extended the suspension of trading in derivative contracts of key farm commodities by a year as the world's biggest importer of vegetable oils, and a major producer of wheat and rice, tries to tame food inflation. The Securities and Exchange Board of India, SEBI, had last year ordered a year-long suspension of futures trading in key farm commodities, a dramatic step since allowing futures trading in 2003. In a notification issued late on Tuesday, SEBI said the suspension of trading in futures contracts would continue until December 20, 2023, on soybean and its derivatives, crude palm oil, wheat, paddy rice, chickpea, green gram and rapeseed mustard.
Indonesian President Joko Widodo on Wednesday confirmed an export ban for bauxite starting in June next year as scheduled, to encourage domestic processing of a material used as the main ore source of aluminium. The resource-rich nation has surprised markets with its commodity exports policies, including brief but controversial bans earlier this year on shipments of palm oil and coal, of which Indonesia is the world's biggest exporter. It is also among the world's top suppliers of bauxite, with China its key buyer. The timing of Indonesia's ban, however, is in line with its current mining law.
Moving on to the top news in the energy sector.
The resumption of flights in China, Asia's top jet fuel consumer, should provide a tailwind for a recovery in demand for aviation fuel across Asia in 2023, although the journey could be a bumpy one. Among oil products, jet fuel is expected to be the last to return to pre-COVID demand levels in Asia as countries have various rules on reopening borders and quarantine measures that may deter travelers. A full recovery in jet fuel consumption will boost Asian refiners' margins and crude demand further, lifting global prices. China relaxed COVID-19 restrictions in early December, prompting airlines to add more domestic flights.
India is planning a stabilisation fund to keep prices of credits in its planned carbon market above a certain threshold, ensuring that they remain attractive for investors and that the market succeeds in cutting emissions, two government sources said. Money in the fund would be used by a market regulator to buy carbon credits if prices fell too low, one of the officials said. Consistent investor interest in credits and a floor under the price would be needed because sharp falls in the market could discourage industries from reducing carbon dioxide emissions, that official added. Next, we have the top news in metal markets. Copper prices hovered around $8,350 a ton on Wednesday as hopes that China's easing of COVID-19 restrictions will eventually lift demand were offset by a surge in infections that is reducing consumption in the short term. China is the biggest consumer of metals such as copper, which is used in the power and construction industries. Its zero-COVID policy disrupted economic activity and helped pull copper from a record high of $10,845 in March as low as $6,955 in July.
Gold prices rose on Wednesday, holding above the key $1,800 level, as expectations of slower U.S. rate hikes lent support, but a rise in the dollar capped any further gains in the non-yielding bullion. Spot gold rose 0.3% to $1,822.63 per ounce by 10:38 a.m. Eastern Time, 15:38 GMT, after rising more than 1% on Tuesday on the back of a dip in the dollar. U.S. gold futures gained 2% to $1,829.200. We believe the trend continues to move sideways to higher, with the market focused on the idea that the Fed is coming to an end with its interest rate hikes in early 2023, said David Mega, Director of Metals Trading at High Ridge Futures.
We will now look at the top news in the agricultural.
Malaysian palm oil futures jumped on Wednesday to hit a 12-day closing high as concerns over flood-related supply disruptions in the world's second-largest producer lifted prices. The benchmark palm oil contract for March delivery on the Bursa Malaysia Derivatives Exchange closed up 91 ringgit, or 2.35%, to 360 ringgit, $81.19, a ton. Prices are juxtaposed between bullish fundamentals and worsening demand, said Paramalingam Supramaniam, director at Selangor-based brokerage Pelindung Bestari. That is all for today's news on commodity market. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.